In the Mumbai News Center, I'm Sonal Bhutra. You're watching Power Breakfast. One day after the big union budget announcement as well, we have the rates coming in from Fed overnight and Adani FPO also being withdrawn. So a lot to track. But first up, let's take a look at what the Asian markets are doing. Largely higher following what we saw as far as the US markets are concerned. The Fed rates hiked by around 25 basis points. So following that, the Taiwanese index is up around 0.6%. We have Hang Seng, which is higher in trade, up around 0.1% as we say. But other indices like Shanghai and Straits, they are lower. However, if we look at Nikkei, that too is in the green, up around 0.3%. So largely green is what the mood in the Asian market is right now. Let's quickly take a look at the SGX Nifty as well, because despite the strong handover from the US markets and good gains seen in the Asian markets as well, it is indicating that the start for our own markets could be in the red, down around 90 odd points. Yesterday was a very volatile session. Let's see which way things go today for our own markets. But of course, the big global market queue overnight, the Federal Reserve raised rates by 25 basis points as widely expected. The policy panel in its statement said inflation has eased but remains elevated. It reiterated the FOMC believes ongoing rate increases will be appropriate. CNBC's Steve Leisman wraps us with all the action here. Steve?
Federal Reserve raising by 25 basis points to a new range of 4.5 to 4.75. This is the 8th straight hike by the Federal Reserve since March, up by a quarter to 4.5 to 4.75. The Federal Reserve sees ongoing increases as appropriate, so that phrase that some thought might come out remains in. The Fed is still en route to a level it calls a sufficiently restrictive level of the funds rate. One little bit of dovish commentary here says inflation has eased somewhat. However, it says it still remains elevated. The Fed is signaling a new focus on the extent of rate increases and not necessarily the pace. So it says in determining what it now says is the extent of increases. That word had been pace previously. So it's not thinking about it going up by 25. It's thinking about how far it goes at this point. On the economy, it sees modest growth in spending and production. It says job gains have been robust. The unemployment rate is low. All language from the prior statement. The decision was unanimous, with the 4 new voters replacing the prior 4 who were out there. So back to you, up a quarter. Still thinking about ongoing increases, still heading to a sufficiently restrictive level.
In fact, on that note, let us also listen into what Fed Chair Jerome Powell had to say. Listen in.
I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that that disinflationary process that you now see underway is really at an early stage. It would be premature, it would be very premature to declare victory or to think that we've really got this. So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. Our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession, And we have inflation moving down, into the somewhere in the mid-3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Given our outlook, I don't see us cutting rates this year if if our outlook turns true.
Okay, that's the word coming in from Fed Chair Jerome Powell. On that note, let's also listen into some important opinion on the Fed's decision and the policy trajectory going forward as well from JP Morgan Asset Management's David Kelly and Jefferies' David Zerwas. Listen in.
I mean, they say that they acknowledge the long lags by which monetary policy affects the economy, but with inflation coming down, with consumption spending falling, with industrial production falling, they're still raising rates. So, that's obviously waiting too long. So I think, at the middle of this year, we're going to be somewhere with a 3 handle on inflation, middle of next year, 2 handle or lower. We could eventually we're going to end up with inflation below 2%, and the Federal Reserve is going to be trying to push it back up again. And there's no need to get into a recession in between now and then.
Jay didn't really pick a fight with this concept that the market's pricing in a couple of cuts after we peak out at over 5.25. And I think that's, the market expected to have a fight with the Fed. I think that's what Jay's been doing in most of these conferences. He's kind of saying, you guys are crazy. I don't know what you're talking about. We're going to keep on keeping on and invoking Paul Volcker's statements. And he just seemed really docile, and he seemed in a good place. People are starting to feel inflation is coming down. The expectations in the surveys, the expectations are something they watch really closely. And I think he's feeling pretty good about that.
Okay, that is about the Fed rate hike. Meanwhile, in the US market, stocks rallied on Wednesday after a mid-session turnaround as investors focused on Fed Chair Jerome Powell's comments, acknowledging that inflation was easing in the world's largest economy. The Dow Jones closed flat, the S&P 500 up over 1%, and the Nasdaq Composite finished 2% higher. Reacting to earnings, Meta too surged after reporting a strong fourth quarter as well. All right, that's the global market action. We have a lot to catch up on, right? So how will these cues in the domestic and global markets impact our own markets? We have our research team joining in to tell you just that, the trade setup, stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Rima, let me come across to you first up. What is the market setup looking like today?
Well, it's the D-day after the budget. But, the focus is going to be taken by the Adani Group stocks as well as, by the Federal Reserve. The budget did what everyone was hoping for. The capex thrust, it energized the markets for a greater part of the trading session. But the rout in Adani Group stocks in the last hour of trade hogged the limelight yesterday. So yesterday, by night, we heard that the Adani Group has withdrawn the mega 20,000 crore FPO, and the Adani global bond yields have also surged. Adani pulling out at the last minute doesn't inspire too much confidence. But remember, the Adani Enterprises stock price is now hovering around 2,100. So it's a good 1,000 rupees lower than what the FPO floor price was, and much more compared to what the anchor investors had put in, which was at the upper end of the trade band. Yesterday, Adani Enterprises stock was down 28%, but the delivery volumes was just close to about 14 to 15%. The group market capitalization has declined by close to $9 to $10 billion since the Hindenburg report. One more internal in the markets, which is a bit heartening, is the FIs. So FIs have been selling intensively in the cash market for the last 7 to 8 trading sessions. But yesterday, on budget day, you had the FIs buying 1,785 crore in the cash market. So day one of the February series, on budget day, the FIs pumped in money. And this comes on the back of 41,000 crore of cash selling seen by the FIs in the month of January. You've been talking about the Fed for the last few minutes, how the Fed has raised rates by 25 basis points. The Dow had an intraday surge. At one point of time, it was down 500 points, but managed to recover to close flat. The Fed has kept more rate hikes on the table. A quick word on the budget. CLSA says the introduction of the new tax slabs is unlikely to result in any incremental consumption. If that's the case, it could come in as a bit of a disappointment, though metals and cement could do well given the thrust on capex. Today is also the weekly expiry, and the big levels to track will be 17,800 on the way down to about 17,300 on the way down. Back to you.
All right. Okay. Thank you so much, Rima, for all those updates. Of course, a few things will dominate the mind space today, apart from the budget reaction as well. Let's talk about stocks as well. A lot of earnings that we have to address. Vivek is here to take us through all those stocks as well. Good morning, Vivek.
Well, good morning. Quite a few results that came in post market hours yesterday. Also late last night, given the withdrawal of the Adani Enterprises FPO, all of the Adani Group stocks will remain in focus as well. Moving on to results, Britannia reported a very strong quarter despite a one-off significant gain. So when you're talking about the core EBITDA coming in at close to 820 crore versus the CNBC-TV18 poll of 675 crore. So clean beat as far as Britannia is concerned. Also keep an eye out for IDFC twins. Both IDFC as well as IDFC Bank will remain in focus. IDFC delivered its results. The profitability came in at close to 272 crore versus 18 crore on a year-on-year basis. And also the management has said that they would now be investing close to 2,200 crore in IDFC First Bank, increasing the equity holding from 36.4% to 40%. Keep an eye out for Tata Chemicals as well. A strong set of results coming in from that company as well. Profitability up almost 12% on a year-on-year basis. EBITDA up almost 69%. Ashok Leyland, delivered its results yesterday. Good set of results coming in from Ashok Leyland. Revenues up 56%, close to the 10,400 mark. Profitability at 319 crore versus a loss seen last time around. When you're talking about the January auto sales, Ashok Leyland delivered auto sales of close to 17,200 units versus versus Nomura's estimate of 17,450 units. On the back of January auto sales, Hero MotoCorp continued to show slightly muted set of numbers. Total sales at 3.56 lakh units versus Nomura's estimates of 4.1 lakh units. Lastly, IndusInd Bank clarified on its exposure to the Adani Group. The total loan outstanding towards the conglomerate is 0.49% of the bank's loan book.
Okay, that's a long list, Vivek. Thank you so much for joining us and telling us what's happening as far as stock-specific action is concerned. Let's go across to Nigel now. He'll tell us all about the F&O space. Hey, Nigel, good morning.
Well, morning. The point that Rima made that the FIs they bought yesterday, and they bought for the first time in 7 sessions. Remember, they sold close to on 24,000 crores in the previous session. So pretty heartening out there. And keep in mind, this is the largest buy number we've seen all the way since November. The institutions, well, they net bought as well, close on 2,300 crores, and that's encouraging because that's the highest we've seen in the last 40 days or so. The first signs, though, of the FIs covering some shorts on index futures. At least that's what the data point threw up yesterday, because they covered close to 7,000 short contracts. So the short positioning still continues at around 81%. So they continue to remain net short. But after a few days of adding 25,000 contracts on the short side, we did see some bit of a squeeze in yesterday's trade. And it appears the Nifty Bank that's been the weak point at lower levels appears there was some bit of covering that played out there. On the option side, well, the 17,800, 17,700 call, at one point of time, those premiums were more than 100, 150 rupees odd. So keep in mind that both those two strikes, well, they have been getting written, for the last few days, and that's likely to continue. So we could get a bit of a pop, though at higher levels, we're expecting some bit of, selling pressure. The support, 17,350 to 17,400. We've visited those levels in the last 1 week or so, and we have bounced out that. So that's a crucial support because the bulls are coming into fight out there. But as yesterday we saw as well, 17,950, which is the 20 and the 100 DMA, selling did come about. SGX Nifty suggesting a 100-point downtick. I'm guessing that maybe we slide further, in the first hour itself. And then the hope is we'll see a bit of a short covering bounce. Let's see whether or not that plays out.
Well, the big story overnight that we are tracking, Adani Enterprises board last night decided to withdraw its 20,000 crore rupee FPO after a sharp fall in share prices. It is since the Hindenburg's research report was published. Nimesh is here to tell us more about this development. Hi, Nimesh. Good morning.
Hi, Sonal. Good morning. So, a couple of developments as far as the Adani Group is concerned. First, on the Adani Enterprise FPO, a big U-turn, and late night, the company has announced that they're going to withdraw the 20,000 crore fallen offer which was subscribed the previous day. Now, the company in the release said that they, given the unprecedented move and the current volatility in the stock price, they aim to protect the investors' interest, and they're going to refund all the money to the investor. So that's a big announcement which has come from Adani Enterprise. Now, yesterday the stock actually intraday fell more than 30%, and it ended almost 30% lower, and it dragged the other Adani Group stocks as well. So that's the first bit of development as far as Adani Enterprise is concerned. Additionally, there was a further announcement from the group with regards to the pledged shares concerns in ACC and Ambuja. Now, even those stocks were under pressure yesterday, and there was a lot of chatter about whether the pledged shares are getting sold, at a promoter level. Now, for that, the company has very clearly said that none of the shares have been pledged by the promoters as far as ACC and Ambuja is concerned. In fact, the promoters have only provided a non-disposable undertaking, and accordingly, there is no requirement for any top-up cash or any top-up of shares of ACC or Ambuja, and hence the concerns or whatever the rumors about the pledge getting sold in the market with regards to ACC and Ambuja is not true. So, two bits of development. One, the Adani Enterprise FPO is withdrawn, and two, there is a clarity that none of the shares of ACC or Ambuja is pledged by the promoter, so there is no risk of any selling, or there is no need for further top-up of cash as far as ACC and Ambuja is concerned.
Okay, Nimesh, thank you so much for joining us with all those important details. In fact, Adani Group Chairman Gautam Adani says, and I quote, "Our balance sheet is very healthy with strong cash flows and secure assets, and we have an impeccable track record of servicing our debt. This decision will not have any impact on our existing operations and future plans. We will continue to focus on long-term value creation, and growth will be managed by internal accruals. Once the market stabilizes, we will review our capital market strategy." End of quote. Okay, that is about the Adani Group, but of course the big focus yesterday was also the budget, which has continued with the government's agenda of plugging tax arbitrage options used by the ultra-rich. It has proposed taxing payouts received from life insurance policies issued after April 2023 if the total life insurance premium of all policies combined paid in a year exceeds 5 lakh rupees. Revenue Secretary Sanjay Malhotra made a crucial clarification regarding this as he spoke to Shireen Bhan. Listen in.
Is the 5 lakh rupee threshold for premium paid in 1 year or over the term of the policy? That's question number 1.
Yeah, so it's 1 year. So every year, you can contribute 5 lakh rupees towards one or more than one policy. And this is in addition to the 2.5 lakh rupees limit that you already have in ULIP. So overall, insurance basket, you can buy policies worth 7.5 lakh rupees year on year on. Every year you can pay that premium. So it's not over the life term. This limit is not over the life term of a policy, but this is an annual limit.
It's an annual limit. And, again on this aggregation aspect, is the threshold per policy or aggregate of all policies?
Aggregate of all policies.
Aggregate of all
together
policies.
For a year. For a year, but not over the term of the policy.
Okay, so aggregate of all policies for a year, not over the term of the policy.
Right.
And will only proceeds from premium above 5 lakh rupees be taxed proportionately, or if a person crosses the threshold, 100% of the proceeds will be taxed?
That's right. I mean, if it crosses 5 lakh rupees, then that particular policy gets taxed.
Okay.
So he can always choose, to divide his policy and keep the premium, the 5 lakh premium, the policies with premium up to 5 lakh separate. If he wants to buy, still wants to buy a policy more than 5 lakh, that 1 lakh rupee policy can be different. So that way, he can avoid taxation on premiums, policies with premiums up to 5 lakh rupees.
Okay, important clarification out there. But with that, we'll slip into a short break. Up next, we'll get you all the cues coming in from the commodities market. Stay tuned. Still tuned into Power Breakfast on CNBC-TV18. We spoke about the equity markets, the macros as well, global markets also. So it's time to talk all about commodities. Manisha Gupta is joining us this morning to tell us all about the commodity space moves. Hey, Manisha, good morning.
Sonal, thank you so much for that. Well, it's a solid green on my screen when I look at commodities. This is especially after the US Fed meeting yesterday, where we have seen 25 basis point rate hike as expected, and a slightly dovish statement from Jeremy Powell also has pulled down the US dollar index, very supportive for gold and various other commodities as well. So the gold prices now have surged past $1,950 an ounce. We did see a high of $1,969 in the overnight markets, and I'm assuming once the Indian markets open, we are going to hit an all-time high yet again in case of gold prices. Silver also taking a lot of support, so we could be back above that 70,000 rupees per kg mark for silver as well. Some profit taking and decline is what we started yesterday night in sense of crude oil prices. 3% of decline overnight, but in the Asian markets, 0.5% of gain is how that one is trading as well. The OPEC and allies meeting yesterday has kept the crude production steady, so that is out of the way. The US Fed meeting has had its impact. What is bothering the crude is that there are still higher Russian crude exports which continue into the market. And the second thing is the higher than expected US inventories at 4.14 million. Markets were anticipating just about 500,000 of a rise. So this is way many times higher, and that's what's weighing onto the prices right now.
Okay, all right. So looking good for gold. Crude prices are lower overnight. Manisha, thank you so much for giving us that lowdown. But of course, we'll also look at the equity markets because SGX Nifty is indicating a downtick of around 112 points for our own market. So important trading day ahead for all of you. With that, we'll wrap on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next and we'll take all the action forward.